Right, let me go across. Sandeep Sabharwal joining us this morning. Sandeep, IT numbers continue to trickle through. Wipro weak, TechM looking relatively better. HCL Tech winning or taking over a GCC account. How's it looking for IT broadly? I know that it's just been maybe 2 or 3 days since we spoke, but anything changes in terms of a view or in terms of a sector or stock tilt, subsector or stock tilt?
Like we discussed earlier, IT continues to be more of a swing investing or trading, you can say, bet where investors can make use of any weakness which comes due to the US tech sell-off, etc., to buy for like low double-digit kind of gains. Now, the key takeaway, as I see from like we don't have much exposure to technology actually, as a disclosure, and the key takeaway I see from technology sector results is that things are not falling off the cliff as many people were expecting. Like there is relative stability. Companies are adapting to whatever changes are happening. Although accelerated growth is some way away, the deceleration, the sharp potential deceleration might also not happen. So I think uh, the way see it is over the next 12 to 18 months, many of these large Indian IT companies will evolve, adjust to whatever is happening in the overall AI led technology universe and potentially start growing after that if they can like some of the companies which can adapt will start growing after that. So that's how I see the sector overall.
Sandeep, hi, morning. What's the expectation from the big Saturday? You've got ICICI Bank, HDFC Bank, Axis and Kotak all delivering their numbers. Some smaller PSBs as well like PNB, etc.
I think private sector banking numbers should be strong. Credit growth has been strong. Deposit growth has been reasonably strong. NIM should stabilize or potentially expand for some of the banks. Uh, Asset quality should be stable, leading to, and because the loan growth has picked up, fee income should also pick up, so lead to stronger profit growth. And the outlook going forward also is positive. So I think the financials overall and large private sector banks remains a good space for investors.
That it does. And Kunal, is the conviction showing on the charts of Nifty Bank?
On the banking charts, I would still believe that it's one of the more heavy weighted and the stronger index. Private sector banking are the ones which are still looking very strong. And within private sector banking names, I think ICICI Bank has taken the major weight in terms of the price performance. And then I think followed up by names like IndusInd Bank, which has also shown some good performance over the last 2 3 months. So banking has been one sector where the moves have been a lot more stronger for individual banking stocks. Like, for example, HDFC Bank has recovered almost 100 points from the previous close of 727.30 for the stock price. ICICI Bank is up almost 20%, 15% from its March, April lows. So as a sector, it looks attractive because few of the components have actually outperformed and done very well. On the bank index specifically, what's been happening is over the last 4 5 weeks, we have been consolidating. We are still trading above the long-term moving averages. So the setup is positive for the banking index, but it's just that the move which is not trickling into the other set of the banking names, like HDFC Bank is not being coming back above the 200 moving average. PSU banking stocks are not the ones which are seeing any kind of a major recovery from the price correction. So that's why you have to be very, very individualistic within the banking index if you have to take a bet.
Right. Okay, Kunal, Sandeep, both of you, hang in there. We're going to take a very quick commercial break and be right back, continue our market discussion with our experts.
Welcome back, and you're watching, of course, The Market here on ET Now. Let me quickly take it across. We are also joined in by Ashish Chaturmota, who is Managing Director and Fund Manager at Apex PMS at JM Financial. Ashish, the tire stocks and some of the numbers from CIAT looked weak at the outset. Your take, should one go long at this point of time, if at all you see a bit of a knock on the stock?
Hi, very good morning.
Very good
So
morning.
as far as tire space is concerned, we have generally avoided this space because of the kind of material volatility which generally this company faces, and I think the margin stability is also not very strong in the sector itself. So rather than betting on tire companies, we generally focus on auto ancillaries, where we have seen a lot of wallet share gain. A lot of these companies are gaining from their existing OEMs, and apart from that, there is a lot of new product launches which is also being done. So we believe companies like SJS Enterprises or Sansera Engineering, which is also into now, apart from auto, they are focusing a lot on the aerospace side of the business. So we try to focus on these names at this point of time rather than the tire companies.
All right. What's your take, Sandeep, with regard to BHEL's numbers? The numbers looked extremely strong at the outset. Execution seems to have picked up meaningfully, profitability coming back. Q1 generally a soft quarter, but they've done relatively better. Of course, stock price has also run up. How should one look at it?
So I think tire companies will face another couple of quarters of significant margin pressures, although the demand trends look positive. So demand trends have been good, but the margin pressure will remain, not only because of crude derivative input prices increasing, but the rubber prices have also shot up substantially. So although crude derivative prices have started to moderate and could moderate further, uh, it's difficult to say whether rubber prices will similarly come off. So was it unexpected that this kind of margin squeeze will happen? No, it was not unexpected. So this was very well expected. So a large part of that could already be in the prices of these stocks, but there doesn't seem to be any big trigger, at least for a few months.
And Sandeep, what about the likes of ABB, especially circling around the commentary on ABB India's performance, and then BHEL, which was a big mover yesterday?
Yeah, BHEL is a prime turnaround candidate. We own the stock, and I think the performance will just keep on improving and surprise on the upside for the next couple of years as the execution picks up, because most analysts tend to underestimate the impact of operating leverage as it plays out. So operating leverage in BHEL will be quite substantial. And I think although the stock is now at an all-time high, it's not as cheap as what it was maybe a year or two back. But I would still say that it does have significant triggers in terms of positive surprises in terms of earnings delivery over the next couple of years.
Ashish, you want to add to the views on BHEL?
Yeah, so we are quite positive on BHEL because the way, the thermal capacity addition is being taking place. So earlier target was around 97 gigawatt. Now we are talking about 110 gigawatt in terms of thermal capacity. Obviously needs coming from data center and the overall power shortage which is happening. So all put together, BHEL is going to be a very key beneficiary of this shift which is happening on the entire demand side. Apart from that, what we have seen in this results is that after 8 quarter of disappointment, now this company is turning positive, and this time the two things: one, the execution capability has improved; second, the new order inflows which has come into the business has also resulted into margin profile going up, and thirdly, we have seen gross margin also going up. So all put together, we believe that this is a very structural story to play out this entire thermal power capacity addition, and we believe 480, 500 could be potential upside which can be seen in BHEL in the next couple of months.
Sandeep, let me come straight back to you. Geo Financial, the numbers looked extremely strong, but I mean, you're looking at a company which is 1.5 crore in terms of market cap. You've got 1 lakh crore of Reliance stock. I mean, typically you do ascribe a discount to it, but 1 lakh crore of Reliance stock there, and you're seeing extremely strong growth. How should one look at this, and how do you look at the numbers, if at all you've seen them?
Yeah, so it's a sort of startup company. Initial stages of growth will be very rapid, and that's what we are seeing in Geo Financials. But the residual value X of the Reliance stake, I think largely captures what is happening and what has happened in Geo Financial till date. Now, potential surprises could come from a much more rapid scale up of the asset management business as well as the NBFC business. So I think NBFC business. So I think the initial trends seem to be strong for both. So I would say that I would be neutral on this company at this stage, but it has potential to do better.
Right, okay. Potential to do better. That's the take coming in on Geo Financials. But gentlemen, stay with us. Sandeep, any of these niche pockets that you're tracking? Neel Kamal, Mrs. Bector?
Neel Kamal not lately, but Mrs. Vectors is a stock which we also have entered some time back. So it's a company which has very strong brands and has done well over the last few years. So the growth slowed down due to both domestic consumption slowdown as well as in the export markets over the last year or so. And as a result, I think the stock price, the peak was around 450. It fell to as low as 170. I would think that it has value at current prices. Neel Kamal I haven't tracked.
Okay. Kunal, how's Bector Foods looking on the charts?
Yeah, I think Aisha is looking very attractive. I'll just give you a snippet over the last, I think, 5 quarters, the performance has been negative. So for 5 consecutive quarters, the price has gone through a correction. We've corrected from 450 levels to, I think, 175, 180 was the recent low for Mrs. Bector Foods on the charts very recently. And we've seen historically that if after 5, 6 quarters of price correction, the stock goes into a mean reversion, and after a correction of more than 60% in this case for the stock price, you're bound to see a very strong bounce back at play. So I would believe that at least it could try and come back towards the previous 2 quarters high for the stock in the near term. That level is around 250 mark, the 2 quarter high for Mrs. Bector Foods. So which means for traders who are looking at this as a, say, 1 to 3 quarter kind of a time frame, which is 9 months approximately, I would suggest that 250 could be a decent target which the stock may head towards.
Neel Kamal is seeing a spike of 7%. Kunal, view there?
Neel Kamal, I haven't tracked this, Harsh, so I'll skip this one.
Okay, understood. Ashish, would you have a view?
No, sorry, we don't track this name.
No worries, no worries. Okay, I'll quickly also zoom into some result reactions. And SIAT looks weak. GeoFin looks strong, 5% higher on that stock. Of course, still early minutes in terms of the pre-open. We still need to wait for markets to open. But Kunal, is there a view there, Geo Financial?
Yeah, this could be very, very interesting, Harsh, because the stock has been relatively very weak with respect to its other peers. 245 apparently has been a big breakout zone for Geo Financial, where the stock has apparently tried to test those levels but disappointed and succumbed back into selling pressure. So hopefully, I think today, if we see the stock breaking past about 245, and if it sustains by the end of the day, then I think we could be in for a big turnaround for the stock. So it should be on traders' radar, and specifically with the stock closing about 245 levels, that could be a big trigger point for the stock in the near term.
And Ashish, these office leasing and solution companies, SmartWorks, also give us a sense on how you're looking at an office space, a WeWork. A WeWork came out with numbers. What's the view on some of those?
So WeWork has posted very, very strong set of numbers, and this is one company actually in the entire space which has been continuously outperforming its peers. What we are observing is that because of the kind of office leasing space is seeing a very, very strong interest, and particularly even not just from the IT space, but we are seeing a lot of hiring happening because of this overall global capability centers being created. So the definite benefit is obviously happening to a lot of these players like WeWork, SmartWorks, And even EFC is also seeing a very good traction in terms of the kind of yield and the kind of occupancy which they are witnessing. In this space, we will continue to do very well. So I think this is one stock which we think can outperform better than others.
Sandeep, just very quickly, the cabinet decision on mobile manufacturing and what it would entail for the likes of a Dixon, Keynes, and the entire EMS space. Yesterday, of course, turned out to be a very good day for Dixon. But do you still think there's value on the table?
So I don't buy most of the stocks which rely so much on government incentives. However, I think the semiconductor space does have momentum going for it, and the kind of incentives that have been announced are very positive. Even for the mobile manufacturing space, the incentives which are being given are very positive. But now, whether it's good for overall economic, sort of economic wealth generation or not, is another question mark, because mobile manufacturing is very low-end work, and most of the components tend to be imported, and distributing 2.5 to 5% to companies is effectively giving them margins which they would normally not get. So I think, but that's how it is. I don't like this scheme, but then it's there, and it will lead to significant growth for some companies for sure.
Right. Okay. Fair point, Sandeep. But great to have you on the show as always. Thanks for your time. But Ashish, what's your take on how we've kickstarted? Quiet for the Nifty and once again, very stock-specific action.
As far as broader markets are concerned, I think we are in a consolidation phase only. It is more to do with stock-specific action and particularly themes which looks attractive. So at this point of time, we believe that auto as a theme looks quite promising. Within auto, we believe Mahindra could be a very good bet because the kind of exposure they have into EV segment, and now the new CAF norms which is under discussion, where if you sell one electric vehicle, it will be calculated as 3 vehicles under the new CAF norms compliance. So obviously, Mahindra would be a big beneficiary of this thing. Even auto ancillaries, we are quite positive. So as we mentioned, SJS, Sansera, these are the names which looks promising. Then pharma as a basket is looking quite positive. So we think Biocon and Aurobindo Pharma in this space could be looked on any kind of dips as an opportunity to buy.